All right, everybody, let's take a look and see what happened in the stock market today. Upper left-hand corner, we are looking at the E-mini S&P 500 futures. These are the December 2021 contracts. If you want to know the symbol, that would be ESZ21. You can also just trade the ES, which would be the continuous contract, which also happens to be December. I trade, occasionally trade the ES, but I'll also often trade the MES. Yeah, it's not a very good E. MES, which is the E micro contracts. Okay, for those of you that have a little bit larger accounts, and you can just trade the ES contracts, right? And that's going to have a lot to do with which one you trade. This for every one of these contracts, there's 10 of these. Okay, just so you know. Okay. So this, or another way of looking at this is, and I'll do a fraction here, this is 1/10 the size of this one, okay? 1/10. So for those, like I said, you have a little bit larger account, what's usually going to determine which one you trade is going to be the initial margin requirements, okay? So I think, let me just see, what are the margin requirements? See if I can get this to pop up here. Yeah, here, ES. You can see the margin requirement here on the far right, $15,812.50 just for one contract. So for some people, they can't trade this because they don't have this kind of account. They don't have this kind of margin. They don't have that kind of leverage, right? You don't have sufficient assets and or cash in your account to take on this one contract. Now this is TD Ameritrade. That's their initial margin. If you look at the top here, you see it says initial margin, okay? That's what they're requiring. Every broker is a little bit different, okay? But they're gonna be in this ballpark. If they're not, and they're much higher than this, then you're at the wrong broker, okay? There are other brokers that have lower than this, okay? So it depends on your broker. All right, I don't think I have there's the MES here. Let's see if we can find, yeah, here's the MES. See it right here? See, it's 1/10 the size of the initial margin, $1,581.25. Now, by the way, they just increased this. They just increased it, I think, like 2 days ago. It used to be $12.80. So they're aware of the increased volatility in the market. They've increased the initial margin. You gotta love it, right? As if it isn't difficult enough to trade, they have to increase their initial margin. So anyway, that's a big difference, okay? If you want to know the difference between those two contracts, as far as margin requirements go, there you go. So that's why some people will trade the E-micros instead of the E-minis, okay? I trade both. Sometimes if I feel like, especially in this kind of area right here, where I have a lot of high confidence as we're coming down into a cycle low, then I might take on, the E-mini contract and not worry about doing the E-micros. I pay a little less commission because I'm only dealing with 1 or 2 contracts instead of 10, so you pay less commission, but you have less flexibility to taper off and apply your risk management. Which, by the way, I'm going to talk about risk management maybe this weekend coming up. I know a lot of people are struggling with that. They don't really have they're struggling with, putting in their stop losses. Okay, I'll just put SL for stop loss, and then TS for trailing stops. I always advocate that on this channel. Okay, you also, for some of you that are like working during the day and you can't sit and watch the computer, I totally get it. You might want to use OCO orders. That stands for one cancels the other. So basically, you're placing 2 trades at once. If one of those 2 trades gets executed or filled, it cancels the other one automatically. So I'll talk about this whole thing this weekend, and there's some other things that go into risk management. I'll talk about this weekend. A lot of people are struggling with their risk management, and they're doing the kind of the all-in thing and getting themselves in trouble, and so I'll talk about that this weekend. You can also apply the same thing I talked about. This is at the beginning of a cycle, which, by the way, this is a cycle right here. Left to right, time, element of time, right? This is the past. This is going towards the future. Okay, whenever you see the two cycles come together, like right here and right here, okay, you'll notice the price is come down, right? It happens here, rant, happens here, rant, here. Okay, pretty obvious, right? Now, it isn't always this obvious. During high volatile times like we're in now, the cycles are really obvious. But in low volatile times, okay, like, you know, when we were back here in the summer, let me get the pencil. Look how low this volatility was back here. You know. But even lower, I've seen where volatility is just creeping along, and you don't get these really obvious cycles like we are getting now, okay? All right. So, in this, if you look at this cycle, even though we're in a downtrend here, guys and gals, we're in a big downtrend, right? Which may be coming to an end, and I'm going to talk about that in a minute. It's possible it's coming to an end. Okay, I'll talk about that in a minute. At least temporarily, okay? I don't believe it's coming to an end like that's it. We're going to go to all-time highs and just shoot to the moon, though that could happen. So I'll talk about that in a minute. But for now, just for the moment here, I want to talk about, even though we're in a downtrend, we're in this downtrend, right? It's pretty obvious. You'll notice at the beginning of this cycle right here, the first third of this cycle up to this purple line, you can see price action was very aggressive moving up, right? Then as we came out of the middle of this cycle, I want you to pay attention to this. As the price stalled in the middle, you can see that right after the middle of the cycle, the price went up again. Right? So look at these two areas. 3 days, 2 to 3 days worth of uptrend in the middle of a big down cycle. A downtrend, I should say. Or a cycle that the whole cycle is down, right? This entire half of this cycle and all of this cycle so far have been down. But even in the middle of that, you get these strong impulses of pricing going up, right? You can see it at the beginning of this cycle. It makes sense. The beginning of a new cycle, price goes up. After the lull in pricing in the middle of the cycle, there's the middle of the cycle there, price goes up. Now, okay, so what I'm saying is, I don't advocate necessarily trading long in the middle of going of a downtrend, but traders will be traders, okay? Us traders, including myself in this, we're going to trade, okay? We're going to do what we do to make money, and that's the way it is. As traders, that's what we do, okay? And aggressive traders, and I'm not even, I know some people consider me an aggressive trader, but trust me, I'm nowhere near as aggressive as some other traders, but I make money on this here and here too, including that and that, okay? I know some people are into Elliott waves, and that's fine. I don't really do the Elliott wave thing because I think Hirsch cycles are just much more reliable. But yeah, I take advantage of these cyclical patterns and the price movement, especially when volatility is, wrong one. Especially when volatility is just banging like it is down here. Okay? Hard to ignore opportunities when you got this kind of volatility going on. Okay, and I'm going to talk in a minute about, what I think is happening right now, okay? But just bear with me on this because I want to share this with you all. How are you going to take advantage of cycles and how are you going to profit during these cycles, okay? As I said before, I don't really advocate trading long, which you have those opportunities right there. They are there. There's no denying those are long opportunities within a downtrend. Okay, I don't advocate that, especially for if you're a beginner trader or even you're kind of have a little bit of experience. Maybe you're considered like a journeyman trader, okay, but you're not considered a master trader. If you want to use that kind of terminology, veteran trader, then I don't advocate trading against the trend. That's not a good idea, because if you don't have a good grasp on that, you'll lose money. Okay, so just trade with the trend until the trend stops. Okay, and like I said, this weekend I'll do risk management and hopefully help a lot of people out on, well, how do you know when it's over? And even if you don't know it's over, like if your timing's off, how do you mitigate losses? How do you keep your losses small? You want to keep your losses small. Obviously, I don't have to mention what we want profits to be, right? We want profits, I'll just put P, for profits. We want that to be big. To really, maybe I'll even throw in bigly. Yeah. Okay, so that's what we want, right? Losses small, profits big, okay? So I'll talk about that this weekend. All right, so I wanted to share that with you all because I think a lot of people struggle within the cycle, the difference between being an investor and a trader, right? A trader is going to take advantage of this entire time, and even back in here, guys and gals, take advantage of all of this. Because even though we had relatively low volatility for most of the summer, I mean, my goodness, man, how can you not take advantage of that? All right, how do you not take advantage of that? As traders, okay? As an investor might just jump in the middle of the summer, late spring, early summer, and just hang on. And just tolerate this stuff. Right? Investors aren't going to get in and out. They're looking at, I don't have it on this chart, but they're looking at 50-day and 200-day moving averages. As long as it doesn't break through those lines, I just keep it long. And that's fine. They make good money too. Okay, they don't make as much money as traders, but they still make good money. Well, I shouldn't say that. It's not fair. They don't make as much money as wise traders, I should say. Okay, but that's okay. If you want to be an investor, that's fine. It's harder, in my opinion, to be an investor because you have to have really good stomach, man. You got to handle a lot of price swings. Okay, and so that's why I do invest, but you know what my investments are, guys? I'm going to share a little insight that I don't really talk about too much about my personal portfolio. I'm not going to get into numbers and all that. Nobody else's business, right? But you know what? It's in my portfolio, guys. Bonds. Specifically, corporate bonds. Corporate bonds. Corp for short. Why? Because these, I'll talk about this weekend as well. Maybe I'll put that under the risk management and how you can build a really good base to your brokerage account as you earn. What do these corporate bonds do? Well, if you pick the right ones, they stay viable for decades on end, and they earn you interest, int for short. Most of them pay twice a year. Okay? So I'll talk about that this weekend as well. Corporate bonds and how this is one of the ways you can bolster your asset base, okay, which in my opinion is better than cash, okay. And I'll talk about the advantages to this weekend, fixed assets in your brokerage account and why you want those. Okay, one of my subscribers asked me today, or yesterday or today, last couple days. I got a lot of people subscribing now, which is awesome. So welcome to the channel, all new subscribers. Okay, but I always, by the way, guys and gals, I always try to respond to every comment. Now, I may not get to all of them because that's hard to do, but I always try to recognize everybody's comments, So, be nice. You can ask questions. That's great. Don't give me nasty comments. I'm just going to delete it or I'm going to mute you on the channel. I don't tolerate that nonsense, okay? So be nice, be respectful. I try to sometimes, I'm human. I make mistakes, but, they asked, one of the, I think a subscriber asked, about this. What should I do? How do I do? And I said, one of the things you can do is you can parlay for you Pirates of the Caribbean movie watchers, you can parlay your profits into corporate bonds. Now, you're going to need some substantial amount of money to parlay into corporate bonds, but depending on your broker, some brokers will allow you to buy a corporate bond, though this doesn't happen too often, for $1,000. Okay, most of them are going to want $5,000 minimum to get into a corporate bond. Okay, but if you hunt, and maybe I'll go over this weekend, I'll dive into it and show you on the platform, on the TD Ameritrade website. Maybe I'll dive into this because you can't trade bonds on the TOS platform. You got to be on the website. Okay, but I'll dive into this weekend. Okay, and I'll talk about it. Maybe we'll look at It's hard over the weekend. They kind of clear out the whole bond listings over the weekend, so I might not be able to show you the bond listings, but maybe I'll poke around and show you some on another site that some of them will show them. But if you know how to dig around and find the corporate bonds, sometimes you'll find these occasionally for $1,000. But usually they tell you got to buy a minimum of 5K, and then anything above 5K at the same time you're purchasing, you can buy an additional bonds for 1,000 or 1K. Okay, that may seem like a lot to you small traders, but now you got a goal. Okay, you have a goal to reach 1,000K or 5K. You know what? Feel blessed, because you know what they used to do in the old days, guys and gals, when I was younger like you all? 10K. You had to have a minimum of 10K. Yeah. So I saved up my money, guys. I saved up my money. I saved up my pennies, so I got to the 10K, and I got into corporate bonds. That's how you do it. Okay? You got to go for it. Just keep saving, keep plugging away. Okay? Move your money from your brokerage account to a savings account. Okay, maybe I shouldn't have said that. The reason I say that, and we'll get into this weekend, but the reason I say that is because otherwise you'll have a tendency to spend it, or you might do some really bad trades and you blew the money, and you don't want to do that. Okay. All right. So anyway, let's move on to this candlestick today, range of 46. So pretty good candlestick, green candlestick. Some of you are wondering probably right about now, is the market going to go up? Okay. We know that tomorrow some options expire, which is going to be here, and Friday is going to be here. And this cycle does end, depending on how you do your cycle. Some end on Friday, some end on Monday or Tuesday. There's even a cycle that goes out to the 24th, which could be the least likely of the cycles, but there is one that goes out that far as well. Okay? So this could be the end of it. It's possible that this today marked the end of this cycle, because they do end early sometimes. We call that the principal. I'm just going to write it here. I won't get too deep into the whole word. Okay, principle, like my chicken scratch. Principle of variance. Okay, I'll just put variance. Okay, principle of variance. Sometimes cycles end low. So if this does happen to be the end of the cycle right here, and the price takes off into this, which would be the start of the next cycle, if that happens, this cycle, we would put it over here. We would make an adjustment to our cycle analysis, and we would adjust the cycles, which happens a lot, guys and gals, when we go through this type of cycle right here. A transitional cycle. That cycle was a transitional cycle back here. So it's possible the cycle's ending right here. Today was the cycle end, okay? Principle of variance. Okay, it happens. But, okay, so before I go on to the but, for you guys and gals that took trades, again, educational video only. I'm not giving financial advice, okay? Just giving my opinion, okay? Strictly opinion, educational video, okay? Trade your own accounts. Do what you think is best. Don't follow what I tell you to do. Please don't do that. Okay. But if it were me, okay, on Sunday, when the market opened on Sunday, Sunday night, which was right there. Okay. Yeah, Monday, Tuesday, Wednesday, right. It opened up right there, okay, that opened up at 43.81. Okay. If you took a short position up there, which I know some people that subscribe to my YouTube channel did, okay, and I know some people, I even saw in the comment section, made some big money in this downtrend, okay? I know they did. And for you guys and gals that made big money during this downtrend, all I have to say is clap, clap, clap for you. That's really awesome. I'm so happy to hear people making good money who happen to also be subscribers to my YouTube channel. That's really awesome. I'm so happy for you guys and gals. That's awesome, okay? For you people that didn't take advantage of that, that's okay. You'll get other opportunities. Don't sweat it, okay? There will always be opportunities in the market, especially during these high volatile times, okay? But if you took a position here, or if you were super aggressive and did it back here, okay, and you haven't closed that position yet, it's something to consider since we got this big green day. Well, I shouldn't say big. Range of 46 is not big, but it's medium size. It's okay to close that position right now. If you're profitable, even though you might have given some back today, it's okay to close it if you want to. If you're feeling a little bit antsy, you're feeling a little nervous, just close it. Don't worry about it. Just close it. Take your profits. Be happy. Don't be greedy. Okay? There's a difference between being greedy and profitable. They're not the same thing. Greed will make you do crazy, excuse my language, crap. Okay? Greed will make you do stupid stuff. Don't be greedy. Just be smart and wise. That's why I always advocate trailing stops, okay? All right, so if you're nervous and you've already got profits on the table, fine, close it if that's going to make you feel better, okay? Now, what do I think is going to happen? My best guess is that this cycle's not over. I could be 100% wrong. This could have been it. Like I said earlier, this could be the cycle's over and to the moon. Okay? Or whatever it's going to do into this next cycle, however high it goes. The chances of this cycle this cycle, whenever it starts, whether it starts here or whether it's starting early like today, okay? If the chances of it breaking all-time highs, I'm going to say, I don't know. It's 50-50. Because I think there's been so much damage done that I'm not sure that in this just one cycle it'll break all-time highs. If it gets aggressive and comes way up, then I think this cycle over here it could do it. Okay? We'll have to wait and see because October, November, December, oh my gosh. We could be having what I'll call the 2018 thing going on here. Like I said before, if you haven't watched my other videos, then I'll mention it again. The end of 2018. Go back and look at your monthly, weekly, and daily charts for September all the way through the end of December 2018 through Christmas Eve. Okay? Now, the price action's been different. 2018 was much more aggressive than what we're seeing now. So I'm not convinced we have the same thing going on as 2018 yet. But we could be. So my guess is, guys, if I had to flip a coin, and I could be wrong on this, I don't think we're done yet. If we get a banging day tomorrow and it's super, and it just blasts through this trend line, then yeah, we're done. Okay, probably. Then this cycle ended, basically practically on time, one day early, no big deal, or 2 trading days early, and no big deal. Principal variance, we're good to go. We're into the next, we're taking off, especially if it breaks through this trend line. Okay, but if tomorrow's just kind of sideways, then this cycle's not done. Okay, and then like I said, if I had to flip a coin, I don't think this cycle's done. I think maybe we got, I think it's possible, just maybe, we got market makers trying to shake the tree, so to speak. Shake the tree. And, we'll see how that plays out tomorrow and Friday, right? We got 2 days left, Thursday and Friday in this cycle, maybe even into Monday. Okay. So that's my take, guys and gals, what I think is possibly going to happen tomorrow and Friday. I don't think the cycle's done. 60-40, the cycle's not done. That's kind of where I'm at. 55-45. It's definitely this is definitely flip. We're in what I call flip a coin area because this is so near the end of the cycle that it could go either way here. Okay, let me just finish up this video with so Stochastic Momentum Index says we're going down. Big Daddy says price action's going up. The VIX is definitely tapered off, and we can see it's tapered off quite a bit. The volatility is down. It continues to go down. So I would say we're setting up for a pretty good bounce, right? Everything is talking about a bounce here at some point. I just don't know if we're in this cycle yet. I don't know if we got into this cycle that today is an early start to that cycle or not. So, we got some mixed signals going on here between these three guys, these three indicators. All right. Pretty big drop here in volatility from yesterday to today, right? Almost a full point, not quite. That's a pretty significant drop in volatility. So everything's kind of looking like this cycle and this downward pressure, at least temporarily, is coming to an end, and we're going to see some price action going up. I just don't know exactly when that's going to be. Okay? So for you guys and gals that want to know my opinion only, about how I would trade, I wouldn't trade a doggone thing right now. I would wait, because this red candlesticks should have been more than enough opportunity to make money. And I would just wait. Wait a couple days. If you get a big huge candlestick tomorrow on Friday, absolutely, you could jump in for some nice action to make some profit. Okay, or if you get a huge candlestick tomorrow, okay, yeah, participate, no problem. That's for traders. Okay, for you new people, and you're not sure how to do that, you're not sure how to take advantage of big candlesticks, okay, then just wait. Don't do anything. Wait till this cycle starts, till we have confirmation. What is confirmation? You'll see the VIX drop even more. You'll see Big Daddy begin to go up even more than already is. This will turn, and it'll begin to cross over in the other direction, which could happen. Okay? That would be confirmation that you've had a change in price action, right? Just wait for the confirmation. If you're a new beginner and you're uncertain, just wait for confirmation. Wait for this to begin to turn. Wait for volatility to go down even a little bit more. Wait for this to come up a little bit more. And you begin to see this kind of level off and starting to turn up like that. Then you can take a long side trade, okay? If you really want to be cautious, okay? All right, that's it for now, guys and gals. If you haven't subscribed to my YouTube channel, remember, I always show my profit and loss on this channel. I keep it real, okay? I'm waiting to see what this is going to do. I'm going to be a little more patient. I don't think this is over. I could be wrong. I may pay the price. Ouchie. I hope not. Okay? But that's what I'm going to do. You do what you think is best for you. Subscribe to my YouTube channel, guys and gals. Don't forget to give me a thumbs up. I really appreciate that. And click that little bell, because you can be notified of all the videos that I put them out. Okay, everybody? Happy trading. We'll talk to you all real soon again next time.